Good morning, everybody. Welcome to another day Market Report brought to you by Mike Bjork. Today is Thursday, November 20th. We got a bit of economic news, or at least is scheduled for today, so we're going to jump right into it. We'll start off with the weekly jobless claims. So if you recall, last week we had 293,000 people apply for unemployment. The forecast for this week was supposed to drop down to 280, and it still get a good number at 291. So good. We've been underneath 300,000 for the last like 10 weeks. We did have about a month where we were in the 280 range, but the last 2 weeks we've crapped up a little bit, but nothing to be concerned. These are actually good numbers here, solid, and very helpful for our economy. The next on the docket is the Consumer Price Index, or also CPI. We had a 0.1% increase in the month of September. So October we were supposed to pull back to negative 0.1, and it actually came in at 0. But when you strip out the food and energy, we have what they call the core, and this is the actual number that the Fed looks at. And we had a 0.1% back in September, and the forecast was supposed to go up to 0.2, and the numbers came in at forecast at 0.2%. So good numbers there. Normally, sometimes this would scare the markets, but because we're so low on inflation, we actually want a little bit more inflation. A little bit of inflation is good for the overall economy, where people like to see a little bit more in their paychecks, but just not going too rapidly, because obviously they don't want to see, the things that they purchase go up too rapidly as well. Market flash PMI for the month of November. So back in October, we had 55.9. So anything above 50 is considered expansion, and it was up. It's still an expansion territory, but it pulled back a little bit. There's 3 months in a row we've seen a pullback in the market flash PMI. So this is something we definitely want to keep an eye on, and it came in at 54.7. On the other hand, we had the existing home sales in the month of October. So in September, we had 5.17 million. Forecast is supposed to drop back a little bit, 5.15, and it actually went the other way. It actually went upwards to 5.26 million. So October, we had existing home sales increase a little bit. So good numbers right there. And we got the Philly Fed. This is the manufacturing out of the Philadelphia area. So we had a good 20.7 last reading in October. Forecast is supposed to dip down as we go into the winter months at 18.5, and it skyrocketed to 40.8. So a huge number there for the month of November and all the Philadelphia region here. So market's definitely going to like that. Leading indicators for the month of October. So September we had a 0.8%, and October actually increased. So good numbers right there overall. We had a little bit of big mixed bag, but overall the numbers are looking very favorable. The only negative I would kind of say would be the market flash PMI having 3 months in a row pulling back a little bit. But overall, good numbers here. Stock market's a little mixed. Dow is down just a little bit. The rest, S&P's, Nasdaq are up, but stock markets, the Dow's down slightly. Now, it did start off a little bit more choppy, primarily because the data that came out of China and Europe was not so favorable. They had weak PMI reports, their version of PMI reports coming out of those two areas, as well as Japan, and obviously that could be a concern for the U.S. as we're out with our economies. Now, today, because we have such a large docket of economic data, I'm not going to get into too much of what the notes from the Fed covered yesterday, but I'll talk a little bit more about that since there's no economic news releases tomorrow, so that way I'm not keeping you guys too long here. Now we'll jump right into the bond market, and we're about 3 basis points higher where we left off yesterday. So yesterday we left off at 103.12, and currently we're about 103.15. So we're up a little bit, so that means a little bit of improvement in terms of pricing for the interest rates today. So, but remember, overall, our current interest rates for home loans are kind of good. Over long term, we're going to be going up, but we may have some parts in the short term where it could have some spikes where it could improve a little bit. So again, overall, short-term mortgage interest rates trends are going to be going upwards over long term, especially when we talked about the Fed, and we'll talk a little bit more about that tomorrow. But the mortgage interest rates are right now are still pretty much in a steady pace right now. Okay, you guys have a wonderful day. Thanks for watching, and we'll see you guys tomorrow.